Okay, we are now live on YouTube.
Okay.
Okay, I'll begin the broadcast in just 10 seconds.
I'll off myself.
Have you ever wondered, how are Bursa Malaysia's marketplace being monitored? Would you like to know how the marketplace is maintained orderly and fair? Welcome to Bursa Malaysia. We are the frontline regulator of the equity and derivatives markets. So, what does this mean for you? Through Bursa Malaysia regulation, we ensure the markets you invest in are orderly and fair, so that you have timely, accurate, and complete information to make informed investment decisions, are able to trade in a fair and efficient environment, have confidence in your brokers to provide secure and trusted services to you. So, how do we protect the marketplace? We have multidisciplinary teams in Bursa Malaysia regulation that focus on specific areas while collaborating with each other to provide a comprehensive network of safeguards for investor protection. We also work closely with other regulators and law enforcement agencies. Real-time surveillance of the market. We have a market surveillance team that acts as your market police. They monitor the stock market against irregular trading activities in day-to-day trading. This team uses an automated surveillance system to monitor trading in the equity and derivatives markets in real time. Should irregular trading activities be detected, this team of specialized analysts will fact-check and engage the brokers involved for their immediate action. Supervision of intermediaries. As safeguarding the integrity of the marketplace is paramount to us, our intermediary supervision team secures the protection of your trading and deposits through consistent broker monitoring and inspection. Disclosure. Continuing listing obligations and gatekeeping of listed companies or products. To be ASEAN's leading, sustainable, and globally connected marketplace, Bursa Malaysia places high emphasis on the quality of our listed companies. This begins from the approving of new listings on the exchange, through to ensuring that listed companies remain of quality through governance and compliance, as it is imperative for investors to be well informed in the fast-paced financial world. Bursa Malaysia regulations listing and corporate surveillance teams monitor companies' corporate announcements so that they are disseminated to you in a timely and accurate manner. Enforcement action is taken should there be any failure to do so, or should there be any material inaccuracies to the announcements made. As we are also a venue for listed companies' secondary fundraising, our relevant departments work together to ensure investors' funds are always used as mandated. We have a dedicated team of finance experts to examine corporate disclosures, including financial reports, so that they are accurate and timely that you can rely on. Within Bursa Malaysia regulation, we have subject matter experts that look at the various international sustainability reporting frameworks that are constantly evolving to ensure that our disclosure requirements are appropriately benchmarked. This ultimately drives the desired improvements in our PLC sustainability disclosures as well as practices. Taking enforcement action. So what happens when the persons are regulated by us? Be they brokers, advisors, listed companies, directors, or their representatives, breach our rules. Appropriate action will be taken against them. The types of action taken would depend on the severity of the breach. Suspected breaches will be investigated, and enforcement actions will be taken if the breach is proven. Our enforcement proceedings and actions are consistent and fair as cases are discussed in a robust manner through our regulatory committees, comprising independent individuals with relevant experience and backgrounds. Policy and rulemaking. Bursa regulation is the guardian to the 10 rulebooks of the securities and derivatives markets. Rules drawn up by the regulatory, policy, and advisory team are always outcome-focused. Industry or public consultations with the relevant key stakeholders will be undertaken, alongside rigorous benchmarking processes to ensure the rules are relevant, effective, fit for purpose, and on par with international standards. Each multidisciplinary team in Bursa Malaysia regulation is intertwined and interact proactively to ensure high standards and market integrity.
Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company, LifeChamp. Our webinar title today is How Currency Exchange Impacts the Stock Market. So my name is Shin Chu. I'm the moderator for this session. Now, the currency market and the stock market are more connected than you think. So behind the numbers, shift in exchange rates can influence company earnings, market performance, and even our portfolio growth potential. So today, our topic will dive deep into how currency exchange can impact our stock market. Now, before we begin, disclaimer, whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mention here. If you decide to make any investment decision, you're solely responsible for all your investment risk. Now, today we have invited a very heavyweight speaker. Now, she has worked in the semiconductor industry for 17 years, with the last role as automation APAC manager at Intel. So she began part-time trading in Malaysian market in 1992 and in the US market in 1997 and becoming a full-time trader in 2008. So she has extensive experience in stocks, options, CFD, forex, and futures. Her core approach is top-down, from macro to industry to stocks. She uses a combination of fundamental and technical analysis. She is very passionate in trading psychology, as she believes that money management and psychology contribute 90% of the success in achieving consistency in investment and trading. So she started Beyond Insights in October 2008, focusing on investment and trading education. She's none other than the founder of Beyond Insight, who is Miss Catherine Toh. Catherine, how are you today?
Yes, great. And look forward to many of you coming into the seminar today. This is also one of my passionate topic on the macro side. Yes.
Fantastic. So I'll hand over the screen control to you.
Okay, great. Thank you. Yes, thank you, Shane. All right. So before I started, as what Shane mentioned of my background, in the 30 years of why I chose this topic to share over here in the Bursa webinar is I see a very high correlation on the currency and the stock market. And a lot of stock investors, especially in Malaysia, are not aware that there's a duration, like in the 2014, right, when the Malaysia ringgit dropped. There's a lot of funds moving out of Malaysia, but they were still stuck to keeping the stocks, thinking that things are okay because it's a strong fundamental stock. So I thought it's very important to understand this correlation so that you can manage your respective risks, and also more importantly to come back when the timing is right. Okay, so that's the context of why I actually chose this topic, and thanks for Bursa to invite us to be able to be a speaker to share this knowledge also. All right, so that's the focus for today, how currency market focus, and this one already shared by Shane, so I won't go through that. Yeah, so the objective of this session is for you to understand the relationship between currency exchange, some people call it forex, and the stock market. And I will be using, since a lot of you are from Malaysia stock market, I will show you the case study for the Malaysia stock market. Depending on how much time I have, I may also share with you the correlation with the US stock market, only if there's time. Then the next one is understand what affects global currency market first, right? Before we understand the relationship between general exchange and Malaysia, you need to understand the high level, like what drives currency market. Because currency is two ways, right? There's an exchange. So it's not a standalone, right? You convert USD to ringgit or Singapore dollar to ringgit, right? It doesn't stand alone. So how the global currency work is the foundation to understand the currency. And then USD MR has its own uniqueness, right? Every country has its own driver. So before you trade the currency, right, then you need to understand what drives the currency, right? So I will be sharing with you that as well. So once you have that context, right, then only you will be able to know how it impacts the stock market. And I have a bonus for you. This one, I have a lot of questions, including my own students, about this Donald Trump tariff. So if I have time, I will elaborate more. Otherwise, I will just go through the slides I prepared on this, which is understand how the tariff impact the USD MYR. And as a result, that may impact the Malaysia stock market. Right. Then from there, I will share with you what can you monitor, right? So that you can understand the risk in this area. Okay, so let's get started. Anyone have other expectations? Do type on the chat, okay? Related to this topic, but probably not part of what I mentioned here. Right, so let's type on the chat. What makes you attend this webinar? Yeah, type on the chat. I'd like to get to know more about what makes you attend this topic. Can I have you sharing? So that I don't feel so lonely, because I cannot see your face, right? And I cannot talk to you. I cannot talk to you. So I like to at least see you typing. Normally when I teach class, I like people to on the camera. Now webinar cannot on. Okay, good. So let's look at, we have, okay, some responses here. Very good, Stephen. Interesting topic and somewhat new to discuss on. Okay, so another one is testing the understanding of how Forex affect earning. Okay, yes, Forex does affect earnings for the company. So let me put it here. There's a know how FX market affects stock market. No, nothing but FX. Okay, so you will learn a lot more here. Why KLC keep dropping? Yeah, there are multiple factors, right? Not only currency. Impact on KLC if foreign fund will come in. Okay, great. So at least I understand what is in your mind. Thank you. Okay, so let me get started. I know this could be a bit heavyweight because this is actually part of a advanced course that I teach in a class. It's called Macro Insight, and currency is just one of the topic. So I attempt to give you the big picture first. Although today is about currency market, but I want to give you the macro picture, right? So these are the 10 factors that affect currency market. Okay, after that, I will move to the Malaysia context. Okay, so what are macro factors? Macro are global factors, right? And the most important, you might want to write this down, is interest rate differential. Okay, interest rate differential. What does it mean? And not just the interest rate differential, is the rate of change, or I will call it anticipated rate of change of that differential. So let me give you a more layman version. During the 2022, which country raised the interest rate a lot? Right? I will ask you this question to make it more interactive, right? So that it's not just me talking. So if you know, you can answer. If you don't know, it's okay. Just listen. Yeah. Which country raised interest rate aggressively during 2022 because of high inflation? And now it is still high, haven't reduced yet. A lot of other countries. Yes, US is the one that raised very aggressively, close to 5% in a year, right? In a year, that's very, very major. Normally people raise interest rate 0.5% or 1%. So over of course, they don't need in one time. So it's 0.25, 0.5, 0.75, and over the course of the year, almost 5%. And so when they do that, but Malaysia, what happened to Malaysia? Malaysia do not do that, right? So aggressive, because when you do that, what will happen? When you keep raising interest rate, what will happen to the economy? Good or bad? Is it good or bad for the economy? Economy will slow down, right? And Malaysia economy at that time wasn't doing that well, right? So we cannot afford to raise the interest rate, even though the inflation is high, but it's not as extreme as US and Europe country, because they printed a lot of money. They introduced a lot of money to the market during the pandemic. Like all this was a result of the 2020 pandemic. Okay. So after the pandemic, where they introduced a lot of money to the market, that's another topic. Last year I did present about that topic, like the called 40, 30, 30. 40% is what happened, the macro, which I talked about the money supply. So now I don't want to repeat that part. And as a result of the money supply, there was too much money flooded in the market, so there was high inflation. So the central bank cannot afford high inflation. Otherwise, all of us will have to pay much higher price, right, for a lot of the goods, and it will be uncontrollable if they don't do it. So they use interest rate to slow down the economy. Okay. So, but because Malaysia cannot afford, and some other countries, they cannot afford to raise so much. So US right now still on the high side. And for the European country, UK, Canada, and other countries, they have actually reduced the interest rate. But US has not reduced that much. Okay, last year they did reduce 0.5, but after that they just stay there. And also because they want to make sure the inflation is on track to go down. By right, they are supposed to reduce 2 more times this year until Donald Trump introduced the tariff. So the Federal Reserve wait again. Yeah, I suspect initially was supposed to be around July they will cut. But right now, because of tariff, they need to wait a bit longer, at least until September for them to cut. So when the US is high, Malaysia, US stay high, but Malaysia is low, right? So become US dollar will strengthen against the ringgit. Also, US will strengthen against Europe currencies, right? Is the USD versus EUR, right? European currency, and also US dollar versus pound. Yeah, so that's what affect exchange rate. Until after a while, when there's not much change, right, then it will stabilize in a range. So moving forward, it will be depend on when US will cut and what other countries will do, right? So do you understand what I mean by interest rate differential? Remember I said it's two things, not just what is the rate today in the US versus Malaysia. Most of the time is the stock market and currency market anticipate the future. Okay, until the future. So people don't, it's just like stock market, people don't look at what is the economy today to buy stock. They're looking at in 6 to 9 months, what is going to happen to the economy. Like the stock market is 6 to 9 months ahead of economy. Same for the currency market. So they're looking at when the Federal Reserve will cut and what will Malaysia do, right? And also what other countries will do. Because if US dollar don't cut and Europe cut, UK cut, right? And also the major currency in the dollar index I will talk about later, then US dollar will strengthen further. All right, it's not just about US and Malaysia. Okay, so that's the interest rate differential. So this is the number one thing to monitor. Later on, I will cover, where can you monitor that? Then what governs the interest rate differential is all about central bank policy, right? So interest rate differential is the concept, but who controls it is the central bank. For example, in Malaysia, the Bank Negara Malaysia. In the US is the Federal Reserve. Europe is the European Central Bank, right? Then we have the Bank of England and so on. Okay, so you will need to read the policy meeting. Yeah, so this is something I monitor closely. US is 8 times a year. Okay. Then for Malaysia, you can go to the BNM website for the policy changes. The third one is fiscal policy, right? So what is fiscal policy? Central bank governs what we call monetary policy. I know for those of you a beginner, could be a bit jargon here, right? There are two major type of policy affecting the market, right? One is monetary. This is what the central bank do. For example, how much money supply in the market. The second one is the interest rates. Okay, so of course there are others, but these are the main two. Whereas fiscal policy is what the government do. For example, Donald Trump tariff policy, right? It's not a fiscal policy, that's like an international policy. But how they, fiscal policy usually refer to how they generate revenue and their expenses. Okay, it's like the balance sheet of the country, right? How they balance the two. Example, the revenue, what does the government revenue come from? Where does government revenue come from? Yeah, just type on the chat. Yeah, because when you do this, then it becomes more logical. It doesn't become such an advanced topic or rocket science. Yeah, they generate revenue from tax. Right, so what are the tax? What type of tax are there? Right, so there's the income tax, like taxing people like us, and there's also corporate tax. Okay, and tariff is actually a tax, right? There's a disguised tax to Americans without telling them American is paying. Okay, they said okay, China is the one who pay. Actually, it's American who paying the tax. Right, it's a consumer tax. Right, so the other like tariff is actually taxing the US. Of course, there's a lot of all these are related to import duties, right? Malaysia also have that. Like when you want to import foreign cars, right? You have to pay the additional tariff as well. Okay, so then the other part is what is the government expenses? Right, government have a lot of expenses like they pay their government staff, Then they have all this social security sponsorship, like all this Medicare. Like the government in Malaysia, right? We are having a lot of subsidy for the hospital. Okay, so something that a lot of people take for granted, but there are a lot of subsidy for the those who are less affordable. So the government have to balance these two. So what happened in the US, right, is imbalance and huge imbalance. So Donald Trump have to impose all these tariff to balance it. So Malaysia also have to do the same thing, right? So every year they will have a so-called a budget proposal. So in the budget proposal, they will attempt to balance that. And this is also very important, right? Because it will affect which sector will be favorable, right? So sometimes they have incentives for certain area. Like let's say right now, right, in Malaysia want to focus on AI data center, so there will be more incentive over there. But then they have to make back the revenue from somewhere. And raising tax is something that nobody wants to do usually for politicians because they worry that they will not get the vote next round. So Donald Trump, that's why Donald Trump wanted to say that it's China is paying or foreigners is paying. But in the end, I think people know that American is paying. Okay, so this is how the fiscal policy work. In simple layman term, is what the government do, right, to balance their revenue and their expenses. Okay, and the political stability is also very important, right, to determine whether people want to put the money here, right? So let's say there's the two country, everything the same, then of course they will put the money in a more stable country. And stability is important for policy. People, let's say foreigner, this is very important for Malaysia, okay, which is they want to see a stable policy for businesses and investors, so that when they move the money to Malaysia, this is what moves the stock market in Malaysia, not just from retail. The big move comes from a lot of foreign investor. Okay, when you want to have a very bullish market, also very bearish can come for foreign investor pullback. So whenever there's a political uncertainty, they don't see the future, they will be worried, because what if the policy change to you cannot withdraw your money out, or there's a capital control, you cannot withdraw more than X amount? Because in the past, during the when Malaysia money was pegged, right, through the 3.8 that time, due to the Asian financial crisis, there were capital controls. I remember at that time when I want to transfer money for investment, it's limited. Every time you have to declare every 50,000 on it, right? So now it's a 1 million for foreign investment. If you have the local domestic loan, right? If you don't have domestic loan, then you still need to declare. You can transfer more than that. So it's much looser now. But what if the policy change again, right? So understanding the stability of the policy is very important. They need to be confident, because they are not putting the money here for like 1 or 2 months, right? It's not like a trader. They will be keeping it for at least a few years. Understand? Yeah. So do monitor political policy stability. Example, right? Our M2H, the Malaysia second home. Earlier there was some changes, right, between the ruling party, so that has caused some uncertainty. But now what we are looking at here for investor, right, not for people want to come here second home, we look at business policy and related to capital controls. Like those are the main important one. If you want to monitor the news related to these two that may affect foreign confidence, and economic performance also very important. They want to look at the growth rate for the economy in Malaysia. What is our GDP growth? Not just what it is now, forward looking. And now the tariff introduced some uncertainty for Malaysia growth, right? That's why the KLSE is where it is. It is not purely currency. It is because of the tariff uncertainty. So until the past 90 days, right, Donald Trump, have firmed up how much you want to tax Malaysia, okay? Then there'll be more stability. And not just Malaysia, the rest of the world, because it will determine whether there's an overall global economic slowdown, right? Because Malaysia is an export country, right? So we need to look at the global economy doing well, then we can export more. Global not doing well, then we can export less, then it will affect Malaysia economy, okay? So that's the dependency. And the next one is government debt. Malaysia is not a global reserve currency, right? So it's more sensitive to debt level, yeah, compared to US. US have some luxury on that, right? I will talk about it later. The government needs to control the debt. The more debt you have, the lower your currency typically. And also trade balance, how much we export versus import, right? So if it's imbalanced, then there's a net output, right? Yeah, which is what US is having a problem right now. Okay, then the other one is global events, like if you have pandemic, right? So that will cause some uncertainty as well. And global fund flows. This is the most important one for the Malaysia market. But to me, this is an outcome, right? This is not the, let me bring up my pen. Fund flows is a result of the rest. Okay, fund flow is not what I call it, a cause, like it's an effect. Right? Global funds flow is depending on all these other factors. So they will look at, okay, what's the interest rate differential, what's the central bank policy, and the economic performance, right? Government stability. Then as a result, they will look at where to move the funds. But they don't look at Malaysia standalone, right? They will look at global, okay? Global where the currency is moving. Like, just a minute. Let me get my pen up so that I can draw. Okay. Okay, so it looks like the pen doesn't want to come up. Yeah, so far, are you able to follow before I continue? Is it too advanced or still manageable? Yeah, just type on the chat so that I can understand further. Okay, can understand. That's good. Yeah, somehow my pen is not coming out. Just excuse me for a while. Should have launched it earlier. Okay, good. And also before I move on to the other two topics, the next one is commodity price. Depending on what is the main export of the country, right? It can be commodities, it could be services, then it can affect the country currency as well. Example, what is the Malaysia main export? What do you think is important for Malaysia in terms of commodity? What price? Yeah, kelapa sawit. Yeah, crude oil. And yeah, crude oil and palm oil. Right? So if these two are doing well, then we can export more, right? Then we will have more inflows of money. When you export, you receive money. Yeah, then it will also be better for the currency, right? So these are important. Then of course, inflation is also important indicator because inflation will determine whether the government will have a tighter policy or not. Right? So these are the major factors. You can see here it's a lot, right? It's not just a single, and it's not standalone. The most important one is global fund flows, right? It's the one that impact the stock market most. And global fund flows, today we are supposed to talk about how currency affects stock market. But I just want to share with you, currency is not the only one. There are actually many factors. So if I am the global fund, I can put my money anywhere in the world. Right? So let's say BlackRock, right? They are the biggest fund in the world. How they decide to come to Malaysia, you cannot look at Malaysia standalone. Everything is about relative. If I were to have, let's say, those big funds, they have trillions of dollars. Where should I move it? Even though Malaysia is good, but if some countries better, where do you want to put the money, right? Yeah, it's all about where do they put the best, but they also want to diversify. Yeah, so they may put some in the US, Europe, and Southeast Asia. Then within Southeast Asia, which country will be better based on all these factors? Okay, so it's not something so straightforward. Yeah, but of course, today we'll just focus on the currency first. That's why I need to give you the big picture. Okay, so is it useful? Okay, so for the meantime, let me just unshare my screen for a while first because I need to reset my pen. Apologize for that. But because I think the pen hangs, so I need to restart it so that I can draw. Okay, got it. Okay, I got it back. It's hiding behind some window of mine. So I cannot find the pen. Okay. All right. Thank you for waiting. Okay. Yeah. So right now, so I was looking for this. It was hiding behind some windows. All right. So I was thinking of this. So if you were to look at what is the cause, what is an effect, right? So this will be the effect. As a result of all the rest, right? It will drive the fund flows, okay? And the fund flows will indirectly, then directly affect the stock market performance, right? So we need to know what is the root, what is the cause, yeah? So we know what is the main effect. All right, so now that is the global context. So now I'm going to customize to Malaysia, right? So since I talk about interest rate differential is the most important, I'm going to cover the bullets right now. Like go more detail into the bullets one by one that's relevant. I won't cover all the 10 bullets. I will cover the one most relevant to Malaysia. So the first one, interest rate differential between US and Bank Negara Malaysia is an important part. So higher US interest rate relative to Malaysia will attract capital to US denominated asset, right? So because if US keep increasing interest rate and Malaysia stay flat, right, which is what happened so far, it will strengthen US dollar. When it strengthens US dollar, if you are a global investor, where will you put your money? Because if you put in Malaysia, let's say you are a US fund manager, right? Because the big funds are in US and Europe and also China, right? So they will, but China cannot simply invest outside. There's a lot of capital control. So the big funds that can invest in Malaysia, typically they are from the US, Europe, and some Middle East sovereign funds, okay, or some from Japan, yeah. So they will look at where should I put my money. If they put the money in Malaysia and if the ringgit drop, they will start to lose money. Even though they make money from stock market, they can lose money from currency exchange, right? So they will rather move it out first. And they will go to the country that has many factors in their favor. For example, if US dollar is strengthening, right, and the US market is doing well, then the funds will move there. Understand? So that's why it is very sensitive to Malaysia, the US dollar. The next one is if Bank Negara start to raise fast, right? And US is actually going to be reducing interest rate, but it will all depend on the tariff development. Right? Otherwise, now the forecast is potentially earlier September, yeah, because the Federal Reserve will want to wait for Donald Trump to firm up his policy. Otherwise, it's high risk to raise the inflation again. And given that context, US dollar will continue to be strong against the ringgit until a point in time they see that, okay, there's clearer picture of the US dollar reducing interest rate, then funds will move, right? Some funds will move to Southeast Asia, for example, or India. Then we will have more funds coming to Malaysia. Okay, that will be an important one. So example I mentioned, right, the Fed's aggressive rate hike in 2022 and it stay high in 2023 and 2024 because the inflation has not come down. And by beginning of this year, the inflation is tracking well. Like even until now, it's tracking down. If not because of tariff, high chance, right, they will cut interest rate in July and it will be good for the US stock market and also for Asia stock market because it will strengthen Asian currency, including Malaysia. Okay, so we have to wait longer right now. Vietnam is more cautious. They maintain the rate around 3%, right? They want to balance growth and inflation because if you increase too fast, then the growth is impacted. Okay, and this leads to the US dollar strength. And why this matter? I mentioned earlier, but this is to recap, right? Interest rate gaps drive capital flow because it's their risk to manage. Yeah, if they don't manage, if they don't monitor currency exchange rate, they could lose money. Let's say they make money 10% from the Malaysia stock market. Currency drop 10%. End up, they are not making any money. And they are at the risk of currency control, right? Capital controls. Okay, so in order for them to put the money in Malaysia, they need to look at in a year, can I make more than X percentage, right? And this percentage that they make, that need to be worth it to cover currency risk and compare to other countries' return. Understand? So every country has its own risk, not just currency risk, like all those political stability, policy, and so on. So is my risk premium, what they call risk premium, to invest in Malaysia worth it compared to any other countries, right? Okay, so example, during the Fed tightening, right, a lot of funds flow out of Malaysia. And now we can see that there are funds coming back, but there's still concern because of the tariff, so it's a bit yo-yo for now. Later, I'll show you the stock chart with the currency. Okay, so that's the number one. Number two, I mentioned, right, palm oil and gas, because Malaysia is a major exporter of palm oil, petroleum, and natural gas. Okay? So when the rising price for this commodity, they will boost the trade balance, right? It's all about trade balance. You export more, you receive more money come to your country, it reduces the deficit. right? When you reduce the deficit, it can also strengthen the currency. And when the crude oil and palm oil goes down, it will weaken the currency, right? So this is an example. Palm oil price surge in 2022 due to global supply constraint, right? So this support the MRR temporary. However, after that, the crude oil actually came down, right? 2024, 2025. So that actually directly affect MRR. Because this is something that you need to know. Oil and gas account for 20% of Malaysia export. Okay, it's not a small number. And oil price is very sensitive to global demand. Since oil price is affecting Malaysia currency, at least over here you can see 20%. But then we need to know what can cause the oil price, right? If you know that it's 20%, then it's significant enough for us to know what can drive this, right? We're talking about the supply, what drive the supply and what drive the demand. This is a more extensive topic, but I just highlight the important one of that has already affected so far. For example, the geopolitical tension, right? Russian-Ukraine war. They are also oil-producing country. So during that time, sort of good for us, although I don't like war, right? Oil price shoot up. Oil price shoot up, also Malaysia can export more. Middle East tension, like Iran-Israel conflict. Yeah, but once they subside, okay, once the war become like a factor into the market, right? After some time, usually the market will stabilize and the oil price will stabilize as well, right? Unless there's the new development. Okay, so this is where if there's any what they call it, ceasefire, then you know oil price can come down a lot. But the OPEC is the stabilizer, like OPEC, the main producer in the Middle East area. So they will usually want to make sure that the oil price has a support. They will balance the supply demand. So when the oil price come down a lot, they will control the supply. They say they will pump less, right? Then oil price increase too much, then they will pump more. But they are not the main producer right now, right? In the past, yes. Now US is also a major producer and Canada. So that's why they are not so, they are not interfering in the Middle East as much compared to before when they were depending on oil over there. Okay, so this is also important on what affect Malaysia. So why this fact, just to summarize, like why it matters, commodity price swing are critical, and but it could be outweighed by other factors, especially by global demand shift. Example, Malaysia is the oil producer. So what can change the demand? Just now we talked about supply, right? Supply comes from Middle East. So any countries that has a war, supply could be interrupted. So what do you think will affect demand? Any idea? What will affect demand? Yeah, green energy, very good, right? Transition to EV. So do you think Malaysia will transition to EV faster? Yeah, we need more station. Okay, so now let me move on. I still have a lot of points. I need to go a bit faster. This one I already covered, Malaysia economic fundamentals, right? So what affect the fundamentals? Our GDP growth, the trade surplus, foreign direct investment that's coming in. So I'm glad our PM has bring in, Dr. Ahmad Ibrahim, right, has brought in quite a lot of the foreign direct investment to Malaysia, especially the data center. This has a support positive inflow. And if there's a weak growth or reliance on external debt, that can weaken. So the important part is reliance on the US debt, right? Any country reliance on US debt can be very subjected to the US currency up and down. Okay, because if the US currency strengthen, then maybe pay back the debt, then we have to pay back more. Okay, so that's something we need to take note. Example, right? In 2024, there's about 4 to 5% growth in Malaysia due to strong electronics export, right? For semiconductor, that actually support the ringgit to strengthen back last year. However, the exposure to global demand slowed down, right? Because we are quite dependent on China demand, right? Around the world, which are the highest consumer spender? Anyone knows? I shared this in some of the other webinar before. Yeah, US. After US, which is the second biggest country? Yeah, US, then China as a country, but as a continent, Europe is second. Yeah, but country, China. So we want global to do well, right? We want US to do well. We want Europe to do well. We want China to do well. And that will improve Malaysia. But because China slowed down due to they have a property crisis, right? And also because of the US-China sanction. So a lot of due to that, a lot of the factories move out from China. So it's very hard for them to, bring back up the activity manufacturing activity and employment. So it will take a long time, I would say. It's not that they are not, they won't recover, but it's going to be slow. So this will also pressure Malaysia, okay, and also pressure our ringgit. Okay, so this is just a summary. Domestic economic health determine our MYR ability to resist the US dollar strength. If our economy is very strong, right, people will want to invest here, like foreign direct investment. So that will counter some of the challenges associated with fund flows out due to US dollar strength. Yeah, do you agree? Let's say there's a lot of opportunity in Malaysia where government wanted to have initiative of data center. Like, so even though US dollar strengthened against the ringgit, those big companies that want to invest in Malaysia will see that as opportunity. Oh, now to invest in Malaysia is cheap. So later on, when Malaysia economy grow and their money when they want to repatriate back, like the gains will be high. Yeah, so FDI, foreign direct investment, can help counter some of the US dollar strength. Okay. All right. So next one is central bank intervention and capital controls. So something you need to understand for Malaysia that some of the foreign investor may be concerned because historically we have a lot of capital controls. Okay, but we are not as tight compared to Vietnam, right? So Vietnam will be even tighter, and China. Okay, Vietnam occasionally will intervene to stabilize the NYR and also occasionally may set in some capital controls. Like for example, right now, if you want to transfer more than 1 million for foreign investment, then you need to fill out the form, extra form. And when you transfer back money, like exceeded, let's say 200K, you have to declare where it's coming from. Like some of this is more for making sure there's no money laundering. Okay, yeah. So it's considered much better compared to the 50,000 limit last time. Okay, yeah. And the role of the Bank Negara as well the central bank is they want to stabilize the exchange, because if they don't stabilize, what happened? For if you are doing business like import and export, how would you feel if the ringgit keep fluctuating and you're managing an export import business? How do you feel? Right, you feel very uncertain. Yeah. So that's why the central government cannot allow that to happen. Okay. Yeah. So the way they stabilize is they will sell US dollar, right? But it's not easy because if US dollar strengthen, people will be very willing to buy back the USD because we are still a small country. Okay, so the Fed rarely intervenes directly, but they influence via policy. So I won't go into that. The US central bank is another big chapter altogether. Okay. So this one just to show you the intervention in 2022 to 2023. The BNM helped cap the MR fall when the US dollar versus ringgit approached 4.8, yeah, which is very high. It's the historical high. Yeah, 4.8 is close to the Asian financial crisis. Okay, so Malaysia capital flow restriction also limit the volatility. So on and off, if you see the ringgit become too weak, then you may start to see capital control start to come in, and the foreign investor will be worried. Okay. So right now the BNM wanted to maintain around 3%. Right, so the why it matter? The BNM can counter market-driven decline. Right, although it's quite limited due to the our what do you call that? Our capital is very little, right, to influence the US dollar versus ringgit. Okay, so now this is the 4 point, and let me go on. Yeah, so this is trade and investment flow. As I mentioned, these are the sub-bullet from all the bubbles. Yeah, to give you more example, trade and investment flow. Malaysia trade surplus was driven by export to US, China, and Singapore, right? And that support the MYR. And if there's when the more we export, then we import, then we have a surplus good for currency. And we have more direct foreign direct investment, which we have, right, in the recent 2 years in the tech manufacturing. That will also help the MYR. And we see a positive trend here. And also US demand. Okay, now this is the highest risk. US demand for Malaysia goods like electronics, because that is subjected to tariff. So it's important for us to know what is the final tariff number. And the other part that is worrisome, Donald Trump may not be he may not want to interfere with Malaysia initially, but because Malaysia is like a scapegoat, okay, some of the controls on sanction where they want to prevent China from importing NVIDIA chip, right, it's routing through Singapore and Malaysia. So due to that, they also want to restrict Malaysia. Okay, so that's one of the reasons. And Malaysia role in the supply chain, right, semiconductor. create a steady demand. So one of the good things is Malaysia started with semicon pretty early, and now US doesn't want to be so dependent on China. So some of the factories, right, they are looking at Malaysia as a stabilizer. But Trump's ultimate goal is to move the factory to US, right? Just remember that it's not to India, it's not to Malaysia. So as long as he realized that it's not so easy to move to US, it will be too expensive, then he won't do this too fast. And for the companies like NVIDIA, AMD, and Intel, they still have Asia and China demand, right? So Malaysia can still sell to the rest of the world, but the US demand may, in the long run, Donald Trump wants it to come from US factories. So what does it mean to Malaysia? It may mean that this area could be quite sensitive, right? The what do you call that? I think overall still positive if I'm AMD and Intel and NVIDIA. Like, where do you think you will put your manufacturing plant, right? Definitely putting in China is not an option. Putting in Taiwan also risky in case China take over Taiwan one day. So there will be Vietnam, Malaysia, right? Vietnam also very close to China right now. Yeah, so Malaysia is a good stabilizer. Indonesia don't have enough semicon ecosystem, right? Thailand has some, Singapore has some, but Singapore too costly. Like Thailand, part of it, assembly. When I was working in AMD, there is an assembly plant in Thailand and also test plant in Singapore, but Malaysia have assembly and test. Okay, all right. So this is one advantage we have on semicon. So why it matter? The trade dynamics can directly impact the real activity, right? Don't underestimate, after this Trump tariff, there will be a whole total reset of the global supply chain. Yeah, it's a global reset, and we are still studying the overall impact. Yeah, we have some idea there'll be some shift, but the final shift will based on his final policy. Right, so there'll be a lot of relocation of all the different factories, and it won't be as efficient as before. That means in the past you put it where it's cheaper and convenient with the ecosystem. Now, because of protecting your country, you may not be using the best the best location. Okay, so I think this one I've already mentioned. I won't go through it. Yeah, need to speed up before I go to I need to show you the chart. US economic performance, right? Not just Malaysia GDP, but US economic performance and policy has the highest impact to the world, right? So if US has strong GDP growth, low unemployment, which is right now, the GDP growth is still strong based on the latest indicator last few months. The unemployment is still low. The Fed policy is still tight, right? They keep interest rate high for longer. So it still will keep the US dollar high until they cut interest rate. Okay. And after the initial volatility from Trump tariff, it stabilized, especially after the US dollar, measured by the dollar index, broke the 100 level. Okay, when Trump announced the major tariff, people are concerned the confidence of the US currency. But after, they have this, after what they call Liberation Day on April 2nd, they announced a huge tariff around the world. And then he changed his mind. He just said 10% first, wait until 90 days negotiation. That stabilized a bit, but not as much until they talked to China. After the meeting with China, then because of the positive results of that conversation, right, it's strengthened back now, is above 100. So we don't think in short term that it may come down that much until two things affecting it, which is the tariff outcome from the 90 days. And the other one is Donald Trump have a proposal right now. he called it the, what do you call it, Big Beautiful Bill, which is tabling, right, which is the government budget. Okay, so which is having a big problem right now at the Congress. Yeah, so if he can, depend on whether he can pass through that can also affect the US dollar. Okay, so I mentioned this already. In US inflation is cooling 2024, 2025, lead to speculation about Fed cuts. Right? However, the Donald Trump policy has shifted that. Okay, so this one, right? Why understanding US economic performance is important? Just now I mentioned US is the largest consumer market in the world, and after that China, right? So if they don't do well, then it will affect Malaysia. If the currency strength also can affect Malaysia. Okay, so this is why it matters. All right, and as a fund flows, this is why US performance is important, because US by default is one of the go-to place where a lot of global investment money goes in. right? If US is strong, the economy is strong, their stock market is strong, their bond market is strong, then where do you think people will move the money? Right? They will move the money there. Right. So, but now because of the uncertainty about Trump, right? Trump is a very abrupt person. People are very worried. They don't know how he thinks. Like after looking at each of the Fed chair, we more or less can guess the next action from Fed, right? Because he's very, very consistent. I know what Jerome Powell look at. Okay. So I look at the indicators he look at, and it's very predictable. But Trump is not predictable. So it caused some people may not want to put all the funds. So that's why we still have hope, right, for Malaysia, where Southeast Asia and China, the next growth region, they will still balance some fund. Okay, so I think there will be a balance between the US and China. And right now we can see that the funds it's likely going to go that way, right? They will not be original, there's some capital outflow, but now the money moved back there when the US-China tension reduced. Okay, and also because Trump is bringing a lot more factories to the US right now. Yeah, although his policy uncertain, but to balance the risk, global fund manager will start to diversify. I think Asia is still, Southeast Asia will be one of the destination. Okay, so last but not least, you need to know that US is a safe haven currency. Whenever there's a crisis, in the past, right, they go to US dollar. Okay, they stay there first. Why? Especially when the bond yield is high. During the 2022, when the US raised interest rate a lot, right, this is more than 5%. So you say, okay, stock market is uncertain. Why not I park my money there? Since US dollar is strengthened, at the same time I get 5%, which is better than the FD in fixed deposit in a lot of place, right? Yeah. So that's why it parked in the US dollar as a temporary, like also in the US money market. But once the stock market is more certain, they will move it out. So now there's huge money in the money market, right? So once the stock market stabilizes, right, then the money can flow back. And some will move into other countries. As the US dollar interest rate goes down, right, then some of this money market fund will start to move up. Okay, but right now it's 5, right? I think until it reduced to 3%, you will see more outflow. Now 5 is still very high. If you're 4.54, I think there will still be a lot of funds keep in the fixed income because they perceive as low risk. Yeah. Okay, so during the risk on mode, the MRR may gain as investor may seek the emerging market yields. If the Malaysia ringgit stabilize, right, and our bond market, the yield is good, right, there could be some funds coming to Malaysia bond. But if our Malaysia currency is not stable, then people will not come into the bond fund. Okay, so once our ringgit strengthen, you may start to see some moving to Malaysia stock market and bond fund. Right now it's not stable yet. Right, so I'll need to speed up. These are just some of the events conflict, right, that has boosted the US dollar demand last time. Okay, yeah. So Malaysia market is considered still developing country, so it's more sensitive to risk off mode. Whenever people are moving to risk off, right, then there's certain currency they move to. For example, US dollar, Japanese yen, Swiss franc, and gold. Right now, there's some going to Bitcoin. Okay. So that's the part that you need to understand how currency move when it comes to uncertainty. There's some exception, but it behave a bit differently during this tariff. Yeah. Okay, so I will not go through this in detail. All right, so I hope can you understand so far? Sorry, I'm going a bit fast because I want to show you charts. Can still follow so far? If you can follow, type yes. If you're lost, type no. Okay. Yeah, it is normal because this is considered an advanced topic. Yeah. Okay, so now let's look at some charts. Okay, case study of impact of currency to Malaysia stock market, and I'm capture this from 1993. Why 1993 is when I started trading okay, in the Malaysia stock market. So now time flies. It's already 1993. I need to minus. That makes me feel old. This is 32 years old now. Okay. So I started trading Malaysia market first, and this is one of my big experience. Asian financial crisis. Anyone have traded during this time? So I have a buddy here. Yeah, can you share if you have traded during Asian financial crisis? Right, during this time, you can see here I plot the Bursa Malaysia FBM KLCI index, right, which consists of 30 stocks benchmark. You can see the ringgit has been quite low. Okay, during this time, I remember 1992, I first joined AMD in the AMD Penang. I was working there for 5 years. In my first 5 months, I was sent to US. At the time, the exchange rate is only 2.6, $1 to 2.6. although at that time, as a fresh graduate, when I go there, I still feel things are expensive there because I always times 2.6, even the McDonald's feel expensive to me. And after that, during the Asian financial crisis, it went to 4.8. Can you imagine that? Yeah. So all the Asian currency was very, very very low compared to the US dollar that time. And because of that high fluctuation, Malaysia government actually Bank Negara actually pegged the currency to 3.8 to stabilize. Otherwise, it will be very disruptive to the import-export company. Okay, and you can see that during this time, why I want to show you this chart, you can see the high correlation when the ringgit weakened, right? It caused the Malaysia market to topple. What do you think is the reason? Right, foreign funds, right, will get out of Malaysia when you have the currency drop like this, right? Because they will lose a lot of money. From, imagine 2.6 to 4.8, you will lose out more than like 40% of the currency. Right? Are you making more than 40% from stock market to shelter that? Okay. Yeah, so of course we don't have big swing like that often, but usually is when there's a major crisis or currency or the government policy change, right? Yeah, so after that, it stabilized back. Okay, and it was in the range bound. The stock market stabilized back, yeah, because of this pegging here. Okay, so once it pegged, it provides more certainty. Right? At least there's something that is certain. Okay, the stock market doesn't like too much uncertainty. When your currency, at least, okay, you don't have to worry about currency exchange. Then you worry about other factors, right? Until they unpack, right? Then because at this time they realized the MRR was undervalued, so they let it float, right? Let it float for a while. Yeah, then it's actually strengthened further, right? Until here. Then we have this problem in 2014, right? So this is where it dropped again. So I'd like you to notice the major correlation here, which is this big part, Asian financial crisis. What do you think is the second one? 2008. Anyone remember? 2008. Yeah. Yes, US financial crisis. Yeah, so it's not only affecting US, is all the country, major country stock market came down as well. What do you think is the reason? What has US financial crisis to do with the global financial market? Yeah, what do you think is the reason? US market dropped. What has it to do with the rest of the world? Why Malaysia also dropped? In fact, at that time, some of the very safe so-called unit trust fund also dropped 50%. Like the dividend fund, savings funds, you may not be aware, dropped 50%. Okay. Because of capital flight as well. Yeah, the same reason, because US is the biggest economy in the world, biggest consumer market. So when US having problem, the whole world will feel it. Okay, so that's the reason. And at that time, you can see that the effect to safe haven again, right? The US currency, when there's a crisis, they fly to safe haven, US currency strengthen, Malaysia currency drop. So this is the time when Malaysia currency strengthened back. This is USD versus MRR. So when it comes down, mean US dollar drop against the ringgit. Okay, you can see when it dropped, KLCI was very bullish. Right, so this is something that we need to take note. When the US dollar weaken against the ringgit, it's very good for the Malaysian stock market. But you need to be prepared, right? So otherwise you will miss the initial uptrend. And if you understand what drives currency is better, although it's a quite an advanced topic. So now we can see here when the US dollar start to strengthen back, then this one drop. Okay. Yeah, so now let me pop up, like this is US financial crisis. Yeah, June 2014. Anyone know what's the crisis? 2014. Something to do with commodity. All right, so I think I didn't put a note here. This is oil crisis. By the way, you can write it down. Yeah, just wrote down. This one is oil crisis. Yeah, there's an oil price dip over here. Over speculation from 140 dropped down a lot. Yeah. Then we have the COVID-19. Right, so when you have COVID-19, US, there's a flight to safety. People flight to US dollar, and also the whole economy was very bad, right, in the whole Southeast Asia, right? So the stock market came down. Okay. So until this point, stock market recovered. Okay, what is that? So I'm going to zoom into this part, the more recent years, right? So you can see better. Okay, so I hope you're following so far. All right, so this is a zoom in version from the earlier one. The earlier one is 1993 to 2025. This is about 32 years. 32 years is very long. So now is the recent years, which is 2018, right, when it start to come down. Okay, so you can see that because during this period, US dollar went up. When US dollar went up, ringgit will weaken. Right, the most important reason is funds flow. The fund flow outside. Whenever ringgit weaken a bit is okay. Whenever there's a continuous trend weakening, foreign funds will go up. So after that, right, it balanced back. The US dollar weakened back. You can see this one go back up. Okay, go back up. So until this point again, 2021, US dollar go back up. You can see ringgit the stock market come back down. Yeah, so it's very sensitive to currency exchange. That's the reason why I want to cover this topic. Yeah, most people don't understand this. That's why I'm a strong advocate of a tops-down investment approach. So my personal philosophy is 40-30-30. Right, 40% of the stock market is driven by macro, nothing to do with the stock or the industry. Right, so when there's a pandemic, everything goes down. Right, except the tech stock is the industry because of the bailout. I mean, not bailout, because of the need to use electronics to collaborate, right, during the pandemic. But other than that, the bigger market was down, except the US and Europe because of the printing money. Right? So if you don't understand the big picture, you'll be holding on to your stock. You think, well, it's a good stock, it's a strong fundamental, I study all the analysis, right? But 40% of the move is based on macro. 30% is based on industry, like during the AI bullishness in 2022, right? Because the ChatGPT came out, right? Driven a lot of the advancement in NVIDIA, right? NVIDIA went up more than 700%, right? That 2 year is industry driven, 30%. And only 30% is stock specific. So if you miss out the macro and the industry, right? What is the industry trend? Then you will miss out a big part of it, 70% of the move. So do you think it's important to understand the big picture? Yeah, type a yes if you agree. Okay, yeah. So now because many people are holding on to the stock, right, when the ringgit was weakening a lot. Yeah. So they could have put it into some fixed income fund. Yeah. Yeah, or I mean, have a more balanced global investment perspective. Yeah. Okay, so now the good news is during this period, right, it's strengthening. What do you think happened in July here? What do you think happened in July, the turnaround? Right, part of it you can see that you can see US dollar was still strengthening at that time. But why is Malaysia market turning around here? Anyone knows what happened here? Yes, it's FDI, foreign direct investment. Yeah. Some is local because of the FDI coming in, benefited Malaysia companies in the data center space. Right, so this was a turnaround which counter, as I mentioned just now, right? One of the page I said, FDI can counter some of the US dollar strength. Okay, but it's not too far. It cannot be if US dollar keep going up. And when US dollar came down here, right, it continued to go up, but now it's came back down, right? So over time it came back down because of the delay of the Federal Reserve to cut interest rate. Okay, so they are worried that US dollar continue to stay strong, right? So some of the funds moved back to US, and now it came back, right? Because of Trump. But during Trump initial the April 2nd, when he introduced the major tariff, it caused uncertainty. So some of the funds want to move up from US. Okay, but now some go back in after the US-China deal. Right? So we have to monitor that. I think for Malaysia, moving forward, the currency, as long as the US-China deal is more stabilized, because that's the major one, then there's also the Europe, Canada, and Mexico, right? Also their big trading partners will provide some stability on whether global economy will slow down. So if there's a anticipation of a global slowdown significantly, definitely will slow down somehow, right? And already factor into the stock market. But if it slow down too much, then it will affect the Malaysia stock market as well, because we are still depending on export. Okay, so that's why it couldn't take off. So what you need to do is to find the safe level entry. I don't chase the market right now, right? You want to have a margin of safety where now with the bad news, when it came down, that would be the better entry point. If you go in right now, the market is on the high side. Yeah, but this is a bit outdated. I need to look at the latest chart. It came back down. Okay, so this is sorry, I share with you what is happening here. 2019, why US dollar strengthened here is because of this part is US tightening, the increased interest rate. Then here is COVID-19. US print a lot of money. Then this is data center coming to Malaysia, and this is Fed's interest rates stay relative high for longer. I forgot I have the animation them to draw. Okay, yep. And also they are here, right? Here, but why it comes down is because tariff concern, right? Started on this date. The Trump inauguration day was earlier, right? Somewhere here around the February, but they already know he's winning. So around this time, there was already concern from the Fed because they know Trump is the guy will be more easing policy. So the Fed will be worried about inflation. Okay, so that's the two part on case study on the chart. So now I want to share with you this is a bonus session. Actually, I was thinking this is if I don't have time, I won't share this. Do you want me to share this tariff impact? It's not supposed to be in the topic today, but I thought there will be a topic of interest. But as you know, right, when I prepared this was 1 week ago, I need to send for Bursa for their compliance. So it's 1 week outdated and things are developing very fast. Okay, so for those of you, how many of you are following up with all these tariff? And if you follow, I mean, you were reading the news, you said yes. If not, you say no. Yeah, and a little, then you put partial P. Okay, good. All of you are monitor closely. Okay, so let me make this quick. On April 2nd, there's a famous name for it called Liberation Day. The US President Donald Trump announced a 10% base tariff on all US trading partners under this international emergency. So by right, the president need to table it to the Congress and Senate for approval. But he has this so-called superpower. If it's impacting national security, right, he can invoke this power because of emergency reason. So he can veto the approval. Okay, so not very good for a democratic country, but there's this rule. With the additional tariff for countries that have significant trade deficit, so Malaysia was hit with 24% tariff on all goods exported to the US effective April 9 as part of this policy, and that's why the Malaysia stock market came down. So US claimed that Malaysia imposed average 47 tariff on US goods, but this was disputed by Malaysia, and citing a 5.6% average, okay, for most favored nation tariff. So US is saying because of this 47, Malaysia imposed 47 tariff on US goods, it's justified to have the 24%. They call it the retaliation tariff. You have a tariff on me, I would have a tariff on you, right? That's why it's called retaliation. Yeah, so reciprocal tariff. Okay, reciprocal. You do this to me, I'll do this to you. Yeah. So this is the comparative tariff rate. Malaysia 24% tariff was actually lower than Vietnam 46%, Thailand 36%, Indonesia 32%, China. So relatively, are we better? Yes or no? Yeah, we're still lower. When it's lower, some people will want to route through Malaysia, right? So that's the one benefit. Because based on all the companies, the big guys who has manufacturing plant, they will look at which one has lower tariff. Even companies from China, they were pretty smart, right? From Taiwan, they were put in Malaysia, and the country less sensitive, right? They put the factories here, but actually it's still Chinese company and still Taiwanese company, right? But they export to US, and Trump knows about this already, right? So he's gradually closing some of this loophole. It's no longer that easy. Okay, yeah. So all right, so this position Malaysia as relatively competitive, but we are still vulnerable if there's a reduced US demand. And I think right now, initially the market was very bad, especially the US market, but it recovered very sharp, very sharp. Why? I think one of the major reasons is the pressure from the domestic companies and also from the local residents make Trump realize that is actually a huge impact to the US economy and his voters. So he sort of relaxed this a lot. His tone changed significantly, even with China. Okay, that was the one that caused US market to go back up, and that also helped stabilize the global market, yeah, and the currency market. Okay, so now let me share with you quickly, since we are talking about currency exchange, tariff has many implications. So because of the scope of this 1.5 hours only, I want to share the tariff impact on currency exchange only. So if let's say there's a tariff on Malaysia, it will reduce Malaysia export, right? So the 24% tariff increased the cost for Americans to buy Malaysia products, right? So they will see those companies from US, they will look at, if I cannot buy, if I import from Malaysia, will be better, or if I import from Vietnam or other countries, like, unless we have unique product, they have no choice, right? But if there's choice, then they will look at which one is lesser, cheaper, right, from a product and overall, right, inclusive of tariff. Yeah, so right now we will not know the impact because it depends after the 90 days, what is the net tariff from all the Southeast country, all the Southeast country tariff from the US. Understand? Now it's too soon. Just that right now we know that we are not the main guy being scrutinized. Yeah, because relative we are smaller. Okay, they will scrutinize the big one like Vietnam, right? China, and also the Mexico and Canada. Okay, so the affected sectors are mainly electronics, rubber, machinery, furniture, palm oil. So, but there are also many areas in Malaysia that you can invest. For example, banks. So you can balance your portfolio. Don't put everything in the electronics, which is more sensitive right now. But there's a pro and cons depending on how experienced you are. The more sensitive the area, when there's a bad news, it becomes very bad. But when there's a development in the tariff and it's not so bad, that's the fastest to rebound, understand? Because the very reason that bring it down, right, is already lesser. Then it can recover. Versus the one that the people move the money over to the consumer staples earlier. But when it recover, it may not be so fast right now, right? Because it will just go up a little bit. Okay? Whereas the one that's penalized the most may go up the faster. But it depends on whether are you able to catch it when it was actually at the low. Right now it's already quite high. So you don't have as much risk premium. Okay, depend on which stock and which market you are referring to. Okay, then the next one is the impact on the tariff impact on MR will be lower export earnings, will decrease the demand for ringgit. Okay, in the foreign exchange. And US importers need less ringgit to purchase Malaysia good. Depend on the deal. Sometimes when American buy from Malaysia, we can also quote in the US dollar. So to them, may not be a big difference, right? Yeah, in terms of the demand, there's still not demand in MYR. Yeah, but they pay in the ringgit, then it will cause demand of MYR. Okay, so this will exert downward pressure on the ringgit, causing it to depreciate if our export is lower. Okay, but so far the ringgit is sort of stabilized already. Don't foresee it to be going down very badly, mainly because I don't think US dollar will strengthen too much, right? If it does, I think Donald Trump will panic again. He will do something. Okay, yeah. So this is the US dollar strength. Yeah. Conversely, reduce US imports from Malaysia, right? So when US dollar become very high, if it reduce the import, right, it will reduce US imports from Malaysia, right? Increase the relative demand for USD. However, at this time, US Treasury demand drop. This one is a bit technical. Cause the US dollar to weaken, which improve the strength. So recently, if Malaysians find that US dollar, I think I need to revise this sentence, a bit complicated. If Malaysians find that the US good is too expensive, right, then they will buy less. So when they buy less US product, it will also less demand for the US dollar. Okay, but because we are considered not so significant in terms of the global demand, our impact to the US dollar may not be so high. Okay, the other way around is a higher impact. Okay, so that's sum up my major sharing. Hope it's useful. I just want to recap what, to me, right, after trading for 30 over years, realize the big money is in a big move. So it's very important to understand the big picture, right? So 40% impacted by the overall market sentiment, the major macro factors. Just now I share with you the 10 factors related to currency, but there's also the major macro factors related to the stock market. Then the industry trend, for example, right now, AI is already for 2 years plus. So what's next, right? AI is still going to be there, but I think the next one is fintech. Okay. AI is still ongoing, right? There's still another decade plus of growth fintech, robotics, right? So you need to understand which stocks will benefit. And there's country specific, like Malaysia, you need to know what industry is in favor. For example, right now, what are all the FDI coming in, right? Those will be the growth area, like the data center, AI related, and if fintech will be the banks and all those other what kind fintech related bank, not the traditional bank, right? Those are the areas. There are five digital bank approved in Malaysia as well. Right, then only you look for the company specific. So if you are able to do that, you will be riding the big wave, right? That means the big macro is in your favor. You're choosing the right industry trend and you're buying the stocks with the right industry. And if you're shorting, you're trading down, then it's the other way around. Okay, so this is the big money is in the big move. Therefore, make sure that you understand the biggest factor. But you also need to know where you are, right? If you're a total beginner, it will be too much for you to do this. So I would say if you're a total beginner, you start with understanding fundamentals of stock first, even though it's at the bottom chain, because we control the big picture. Right, we cannot control the macro. We cannot control Donald Trump, right? Policies. We cannot control central bank policy, right? We will just, as you get more experience, you learn to anticipate better. Right? But you won't get it all right because it's in their mind, right? Yeah, they won't be sharing with you until they implement the policy. So what you can start with is understand the company, and if you can comprehend the big picture, means that you select the strong company first. You stand by. So when there's a big macro problem, then it becomes cheap. But when it's cheap, you're buying the great companies. Okay, it doesn't mean the companies are not important. And you're buying those companies that's more aligned, not so impacted by the tariff, and you know how to diversify. Because those impacted by tariffs doesn't mean you cannot buy. Okay, for example, some of the big Mac, not big Mac, Mac 7, okay, they are impacted, but then when Trump changed his tone, right, those are the ones go back up faster. Now, like Nvidia went down a lot initially, but because of the Middle East investment, then it recovered. Right. So for Malaysia as well, right, there's all AI investment coming to Malaysia. So during the tariff, it came down. But those are the better stocks and those investments not going to go away, then you can get those companies. But you must stand by which are the better one. Okay, you must look at all the financial report first, know which are better one, look at the chart, then you'll be more timely when it turn around. Okay, so this is, just don't, unless you are a total beginner, you start with fundamentals first. But those of you who have been in the market for quite a while, right, it's time to learn about the industry trend and the macro. Okay, so remember, you need to have a systematic approach, not just random, just hear from your friend, oh, this one good, AI, and go and buy. So what we have is for our approach, right? This is the approach that I use. We have a systematic, complete framework for the stock market. So what is systematic? We have 4 trading styles. So each trading style have the clear entry and exit. If you're a long-term investor, you look at your entry exit differently than mid-term trend, then swing trading, 1 to 2 weeks, and intraday. Okay, each one has different approach and versatile, right? If you know different style, then depending on the market condition, you will use different approach, right? During the volatility of the tariff, I was trading more intraday. And at the same time, I look for those stocks for investments that has a good bargain when things turn around. Okay, and I use options as well. And we have a strict money management. No matter what you do, you cannot be overconfident. Okay, you always need to protect your capital, and you need to manage your psychology. Right, just like no matter what we teach our students, it's also dependent on them to follow it. Okay, so we can emphasize, we can nag, but ultimately, it's still up to them. So that's why we also want to emphasize a lot on the psychology. In fact, we have a 5 days bootcamp on psychology. Okay, so if you want to have repeatable success, not just sporadic, a lot of people, they just buy stock, but they don't have a very systematic approach. Like how many of you want to have a consistent way to make money, right? Not just randomly, when there's something happen in the market, then you feel fearful. Like, so if you have a systematic approach, then only you can repeat the success. Like, for example, we have this top-down approach, and we have a very stringent way of like how to screen stock based on 10 criteria, how to look at stock chart to make sure you're aligned with the trend. And when you're wrong, you only risk 1% of your capital. Like, those are very important approach, okay, to close off this. And then only you can have a sustainable growth. Okay, so that's it. Now, I'm not sure whether you have time for Q&A. So why not you share your announcement first, then I can balance time or use for Q&A.
I think we will proceed with Q&A first.
Cannot hear you, Shane. Yeah.
Can you hear me?
Yes.
Can you hear me, right?
Yeah.
Okay. Yeah, we will proceed with Q&A first. So if any question to ask our speaker, you may write them in the Q&A box.
Yeah.
Okay.
Okay.
So The
I
first
hope you can
question,
still cope with my speed.
yeah, the first question is by Patrick Lim.
Okay.
Now, Catherine, just now you show a correlation that when ringgit strengthened, our KLCI index actually surged, right?
Yeah.
So the
Yeah.
question
Let me
here
go back to
is
the chart.
recently due to the tariff uncertainty, which
Yeah.
caused the US dollar to weaken and Malaysian ringgit to strengthen, right? So the US dollar versus ringgit rate has been going down trend, signifying that ringgit is strong. So
Yeah.
why
So this is
the
the
Malaysian
I
stocks
brought
still
the
slow down?
latest chart. Yeah. Let me look at the latest chart here. Because my chart was captured last week. To see the latest. Okay. Let me see. There's a daily chart. Okay. Sorry. What was the concern? Yeah.
So the question here is now that the US dollar weakened against the US dollar. So why do the Malaysian equities still going down?
Oh, okay. So you mean since the let me open another tab here. USD MYR. Okay, so the question is, since the US dollar is coming down, why is the KLCI still coming down? Did I get your
Yep,
question correctly?
that's correct. So
Okay.
that's a question by Patrick.
Yes, because you can see the stock market is not only impacted by currency. Like that's why I mentioned in the macro, currency is just one factor. It's affected by FDI. It's affected by the tariff uncertainty. Because the stock market is forward looking. It look at what will be the economy in 6 to 9 months ahead. Currency is just one part of it only. Currency can impact the big movement of capital outflow, right? It's a big movement. But the big part is, how does people look at the next 6 to 9 months economy? And right now, what do you think, right? I don't think we can go back to square one. That means before Donald Trump implement tariff, he already said it's not going to go back to zero. Yeah. So there will be some tariff. Because why I know that? Because he need money to solve the deficit. Okay, it will not be zero. And as a result, let's say right now, before he implement tariff, this is the GDP for the world. Do you think it's going to be lower or higher with the tariff? GDP for the world. Yeah, just type on the chat. Do you think it's going to be higher or lower? Lower. Like don't talk about currency first, currency, because you have to dissect one by one first. It's going to be lower. So how low? The question right now is how low? If it turned out to be better than expected. So the way market works is like this. So let's say this is before he talked about all the tariff. Okay. Yeah, over here, our market, sorry, let me show you the KLCI first. Yeah. So he was inaugurated around here, right? But his policy already known here, right? And the other reason is because they anticipate here also. There's a reason it came down here. There's only 1 week. We don't look at the 1 week data, right? Yeah, it's only 1 week pullback. Overall, Malaysia, the KLCI is still going back up. This is just a minor pullback. Don't look at the 1 week. When I look at the daily chart, it looks very big. You look at a weekly chart, it's not big. Yeah. One of the reasons for this is the Fed may not, like from currency perspective, the Fed may postpone to September earliest to cut rate instead of July. Like, so that means the US dollar may stay strong for a while. The second reason is worry about the global economy. So depend on, from here, originally the tariff is very bad, right? So the dip here, this is when people panic. After that, Trump was worried because that one is a bit advanced topic. It's the US bond market treasury reaction. So he was worried, so he changed his tone. Then it go back up. So that means a lot of the bad case is already factored here. I won't say the worst case scenario, but if you're looking at his tariff is getting better than what he said earlier, then this will be the bottom, at least for the US. Okay, this is based on standalone factor. So, but moving forward, that means they already expect the economy to be back. Okay, yeah. So now is it better than the extreme here? If it's better, then it will recover, but it won't go back to square one. It won't come back here. Why? Because there will be tariff. It's just a matter of how much. So after the 90 days, there will be clearer picture. Like sometimes you announce something earlier, and it end up at a lower range, right? Then the market can recover. But don't expect, it's not like going back to like the zero tariff day anymore. Okay, so that will impact the global economy. So that's general for the whole global economy. Global economy, then after you look at what about the economy that we export to, right? Will our demand from US and China, right, especially, going to be lower, right? If as a result of the US-China tension, China will slow down further, then it will affect our export, right? Do you agree? Yeah, and also we are oil producer. If there's not much more shipment between China and US, now a lot of containers stuck in China or US, okay, not moving anywhere. And after he relaxed, now all the factories start in full speed. Why full speed? Because Trump has lowered it to the lower percentage, 10%, 10% for China, plus the fentanyl, 20%, right? So which is very low, just for the discussion. And people suspect it's going to be higher than that after that. So they were asking the US order, they're asking China, please expedite, send as many as you can to US right now. So the container are moving again. But if the actual is going to be higher, there will be some demand impact, right? So look at oil and gas, right? You look at all those tanker are the one that use a lot, right? Other than cars. Yeah, so the oil and gas go by global demand. The other one is palm oil. Palm oil also based on whether people are consuming more, right? So that's the reason why it won't be that bullish. So you have to choose the right sector. I also find out that's the big picture in Malaysia. You see, Malaysia KLCI is only based on 30 stocks. It's not so representable, right? So you have to go by industry to look at the respective. Okay, so if I want to look at whether the banks are doing well, right, I will look at CIMB. Right, CIMB is still coming down because they're also depending on economy, right? If more people have money, then they will get more loans, right? Yeah, business loan as well. Yeah, so like if I look at some of the semicon in Malaysia, like Vitrox is not going anywhere right now because there's a lot of uncertainty surrounding the whole semiconductor and the export restriction, right? So last time the data center was also having a setback because they worry cannot import the NVIDIA chip from US. So Malaysia will not have enough the chip from data center for data center. So there's still one risk there. Depending on whether Donald Trump will have a restriction for exporting the high-end AMD and NVIDIA chip. And if not, then the Malaysia data center will have a problem to fill up those chips. So recently, I was surprised also, US approved a significant number of chips to Middle East. Yeah, Saudi Arabia, and also to the Qatar. Yeah, so he's not worried that it will route to China. So the Democrat was worried about that. So that's a big investment. I think that's an exchange. As a result, they have to invest a huge amount in the US. Yeah, so that's all this happening. But as I mentioned just now, I suspect, yeah, I could be wrong, because there are many factors. So I think the biggest concern now is how much the tariff will slow down the global economy. Malaysia is more sensitive, yeah, compared to the US. What is the reason? Because if you talk about relative interest rate right now, if you park into the US bond, you're still getting about 5% plus, okay, or fixed income. Yeah, so which is still attractive for the sort of safe haven. And if you put into some of the covered call investment, right? So right now, Malaysia, you have to just screen through all the strong stock first and look for the developments, right? The continuous development in this tariff. And if the bad news and the support still hold, those are the good stocks. Okay, I'm not going through the stock list today, although I do have one that I monitor and why stock here overall. Okay, but I won't have time to talk about all of them. Okay, yeah. So what I mean, you need to be selective. Today, my intention is not to talk about stock selection, but more to get you to understand how the stock market works. Yeah, right now, I think majority of it is US dollar. When US will cut rate, like that will be the inflection point. If you follow this, you will see when the ringgit likely to strengthen. If they cut, and it's work in anticipation. The moment there's more indication of the tariff not as bad, then the Federal Reserve will not be as concerned. Okay, then they may take less time to finalize the cut. They may monitor after another 3 months. They won't act now because Trump tariff has not been observed in the economy yet. The last 2 months, inflation data was very good. Unemployment is still very good, right? The hiring is still very good. So it shows the US economy is still very good right now. So if it's very good, why does the Fed need to cut rate? Like no need to cut. But the Fed will give it another 3 months, right, for the tariff to be impacted, because right now all the people, when they're going to the Walmart and so on, right, they're still buying based on old price, not new price yet. The new price will come in like 2 to 3 weeks. Yeah. So based on that, they will observe another 3 months. So now is May, right? May, June, July, August. So likely the earliest they will be more confident with looking at these 3 months data. If it's within control, then they may start to cut around 0.5. Otherwise, they will wait a bit longer, like November to cut. Okay, and when these 3 months after tariff data is not as bad, then you know that okay, Trump, the Fed is likely going to cut. I think that will be the inflection point for the ringgit, and then it will improve the stock market as well. Yeah, and also that's number one, U.S. interest rate differential. The second one is tariff development. How much is the tariff for Malaysia, and also for China? Because if the tariff for China is bad, it will slow down China as well, right? Yeah, because if the tariff in China end up originally 145, now reduced back to 30, and end up is 50, 60, okay, it will still have impact. It will definitely slow down. It's just slow down by how much? And if China slow down, they don't have money to buy from us. Makes sense? Could you understand the whole chain reaction? Does it make sense so far? Right. So the uncertainty, I also cannot tell you the answer when it's resolved. Right? I cannot read Trump's mind so much, although I can anticipate what he's likely to do after observing him since the last trade war in 2018. Yeah. So these are the two main ones. Yeah. So at least Malaysia has a FDI. So if you go around those that has investment in Malaysia, those in the FDI area, those stocks, you can balance back and keep some in consumer staples for balancing. Okay, that's about it. And for my portfolio also, I do hedge against other other uncertainty as well, right? So I think it's good to have a portfolio that's diversified, right? In US, in Malaysia, you just have to stand by all the great stock first, right? So that you can see that when they recover very fast, then you miss it. Okay, so that's it. Any other question?
Unfortunately, that's all the time we have for Q&A today.
But I just want to know like what type of questions, even though I don't have time to answer. Because at least
I think those questions may involve a bit of investment advice, which is which are the questions that we are not supposed to take.
Bursa doesn't allow it, and even I personally don't do that because it requires a systematic approach, right? It's not just what I can tell you buy or sell. I don't do that as well. It's very risky because the market is very dynamic. Do you agree? Market is dynamic. So what works right now when Trump changed his policy, that could affect the global environment as well. Right? So that's why you always need to have a protection. Right? I'm a strong advocate of having a money management control. Okay. What about BNM OPR cut or no cut this year? So far, their policy is what I understand so far. I don't follow up as much on the Malaysia BNM, but the latest one I see is they still want to maintain it flat. But if you want to know the actual, what you can do is just look at the BMN policy, okay, document. Yeah. So then you can go to the latest BNM policy for interest rates, right? 2025, and read that. So what I have read earlier, so I just want to make sure that nothing changed, is maintained at 3%. Right, so when they maintain, then the variable will be US side. Yeah. So that's the currency is relative. So we know at least one side is stable. So if US interest rate comes down, then ringgit can strengthen. Like if you look at standalone, as I mentioned, there are many factors, not just one factor affecting it. Okay, now Gemini is also very good. Okay, it can tell you many things. Yeah. Okay, so.
All right.
Yeah. So all right. So I hope that's beneficial. So is it beneficial to you, or is it too overwhelming? Give me some feedback. Yeah. So I just have one more topic left, right, for myself and Kut. Yeah. Okay. So I hope this is useful to you, and look forward to see you again in the next webinar. And also my next webinar will be on. Let me see what's the topic. I think I have one in August. If you're looking for some what affects asset rotation, right? There's also advanced topic. Also have Kut, one of our senior trainer who will be covering on the technical side in September. How to use advanced candlestick to anticipate potential stock price reversal. Okay. Yeah, so for my session will be 13 August. So now I pass back to Shane on when is the next webinar for Brusa, right? Yeah, not
All
from us,
right.
from
So
Brusa.
thank you so much, Catherine, for
Yeah.
doing this segment for us and also doing the Q&A. All right. So, ladies and gentlemen, you just listen to the founder of Beyond Insight, who is Miss Catherine To.
Mhm. Mhm. Okay.
For our next webinar, it is titled Setting Stop Loss and Take Profit Orders, Protecting Your Capital. So this is happening tomorrow morning, 10 o'clock to 11:30. So it's on 22nd of May, Thursday. So if you are keen to learn how do you set stop loss, at what level should stop loss, how should you set take profit target, at what price should you set the take profit target, you may join our session tomorrow morning at 10 o'clock to 11:30. All right. So I just given you the registration link in the chat box. All right. So for those of you who are looking to open a new trading account, you may scan the QR code or click the link that's just given you in the chat box. All right. With that, thank you everybody for tuning into this webinar. Hope to see you in our next session. Bye bye, everybody.
Okay, bye.
Bye, Catherine.
Okay, bye. Sorry, exceeded too many slides. I
It's
was
all
doing,
right.
yeah. I realized I think I was repeating a bit on the what I mentioned on the bullet already.